Good morning, traders and investors. Roger Scott here, senior strategist of Wealth Press. It's Tuesday. It's July 18th. It's about 7:47 in the morning. The market's going to gear up to open up in about an hour and 40-something minutes, to be specific with you. As you can see here, the market's down about 26 points on the Nasdaq, about 6 points on the Dow. Very, very random, but there's a lot of things on the agenda, and there's a lot of things that you need to pay attention to. So welcome to the video. Now, before I begin, very, very quickly, make sure to subscribe to our Telegram channel. Just go to rogerscott.com/Telegram or click the link in the YouTube Wealth Press channel below this video. Make sure to like our videos, and most importantly, I opened up my VIP room for the summer at no cost to everybody who watches these videos. All you've got to do is follow the link in the video descriptor and go there today. It's a Zoom link. Go there today at noon Eastern time. Today is Tuesday. It's the what is it? It's the 18th. Wow, where's the year going? Join the Telegram channel and also join my Zoom room, my VIP room, my champion room at noon today. No cost. All right, now let's get into all of this juicy stuff. And also, if you have a question, post it below the video in the YouTube channel. I'll respond right there and then. So the Nasdaq is down about 27 points. Nothing really major going on right now in terms of market action. But in terms of the big picture, there is a couple of things you need to pay attention to. First of all, if you look at the Russell 2000, it appears to be stalling out around here. Now, I mentioned to you guys a few times that I don't think the Russell 2000 is going to be ready for a breakout till it hits the level of 200. It's stalling right around 193. And if you look at our best friend Cathie Woods, you will see that Cathie is also stalling out right around here. And that area, if you look at the longer term, is nowhere near getting above that area, above the red line, which is the breakout level, which is at 55. So both the ARC and the Russell 2000 are stalling. Now, do you think that's enough? Absolutely not. Look at the Dow. Now, remember, this has been going on for a while. And what did I tell you a while back? I said the Dow's going to stay choppy. It's going to look like it's going to break out, but it's going to stay choppy. Look at where we're at right now on the Dow. We're right here. Algos are hitting really hard, and tons of buy stops are getting hit, trying to snooker this market into, or trying to snooker market participants into thinking that the Dow is ready for a breakout. But in my opinion, we're nowhere near there yet. Matter of fact, look at this price action. Look at 3 months. We're right here. We've been hitting this area now once, twice, 3, 4 times. It doesn't seem like there's any momentum or reason to break away. And earnings are here, but so far earnings have been pricing in all the movement that we've seen in the last 3 months. There was a great article that I read yesterday in the VIP room, and the language was very interesting. It was could earnings defend their move? Basically, can earnings defend the move that we've seen in price? So the earnings right now have to keep up with what we've already seen, which is a nice move up in the last quarter. I mean, look, the Dow went from 32,000 to 34,000, right? So is it ready to go higher? I don't think so. I don't think there's a major catalyst for that. Now, look at the equal-weighted S&P 500. This is a 3-month chart. Does it look to you like it's ready to break out, or does it look to you like a bunch of algos hit it hard and are ready to bring it down? To me, especially based on the momentum levels that we're seeing right here, it looks to me like we're ready to come back down to the base. I repeat, I do not think we're ready to go higher. And also, as I mentioned, a lot of these large cap stocks, like for example, let me show you Google. Look at the movement between last quarter and now. Look at this. 90 to 124, that's a 40% increase. How about Microsoft? You got to understand something. There's from 240 to 350. How much more can they go? And if you look at Microsoft right now, notice the peak was higher than this area right here. Look at what was it? Nvidia. Look at Nvidia. I mean, look at this move. I want you to see this. From 200 to 460. So the question I have now is, what catalyst could we see for these stocks outside of AI, which has been the big thing? So to me, it looks like the top is very close. And again, as I'm showing you on the Dow, the blue chips look like they're a little overbought. And RSP, which is the equal-weighted SPY, it's still in a downslope. It still has not broken down. And look at ARC. It looks like she can fizzle out right here. I mean, we've been higher before. So again, I just don't see a technical breakout. Now, fundamentally speaking, we've got retail sales We've got industrial production today. Big reports. And tomorrow we've got housing starts. And then on Thursday, we've got existing home sales. So you got to keep an eye on interest rate sensitive stocks. Now, the bond market's higher today. As I mentioned over the last 2 days, if it has a problem today, tomorrow, getting above the 102 level, we're going to have a problem. And it's already made a lower lows. So I want to see a catalyst for bonds. I want to see this data being better than expected. If it's not better than expected, I don't think we're going to see an upside. I think we're going to see more downsides. But again, I'm still open to the fact that we may break above the 102 level. If we break above the 102 level, there's a good chance we'll go to the 104 level. And if we break the 104 level, then we can go to the 107 level. But I wouldn't hold my breath just yet for that, okay? Now, earnings. Yesterday was just a teaser. We had like one company. But today, Bank of America, Bank of Mellon, Charles Schwab's, a lot of financial stocks. Notice that, a lot of blue chip stocks. JB Hunt, transports right there. Lockheed Martin, defensive. Morgan Stanley, not expecting anything great from investment banks. Pinnacle Financial, and Western. I mean, a lot. And tomorrow, you've got Netflix and Tesla. So technology. So we got to be looking at blue chips today and tech tomorrow. Now, as I mentioned, technology is on the, so let's look at financials, not technology. Financials are on the plate today. Let's take a look and see what we can expect. Now, I'm looking at it right now, and again, I'm not seeing anything that fantastic here. I'm not. And what we've been seeing so far, and it's been a very small sample, but what we've been seeing so far is like what we've seen on Dell. We've seen stocks opening, here we go, 5 days. They open higher on good earnings, and then they go right back down. And same thing with Wells Fargo. It had better than expected numbers. Look at that. Came up and then started coming down. It's up. It's better now. But my point is, earnings, it's kind of like earnings were like the top. Look, we still haven't gotten to that level back up. So earnings announcement is good, and then the stock comes right back down. So again, from where I'm sitting right now, I'm cautiously optimistic that not all of the price action is priced in. But from where I'm sitting right now, it's very complicated, especially today. If we see Bank of America, I don't know which ones of these are reporting earlier. I'll keep an eye out, and I'll update you in the VIP room today, which is at noon. And I know you have the link either where you're watching it on the page or in the YouTube channel. But again, keep your eye. If some of these stocks come out at the open, keep your eye out on whether the morning, if the news is good. If the news is bad, then forget about it. But if the news is good, see the price action following for like an hour or two following and see what happens. Again, I should probably point out which ones are opening at the open or not, but we don't really trade these on earnings day anyway. But again, look at these Bank of America, Bank of Mellon, Charles Schwab's, a lot of financial stocks. And as I mentioned, financials right now, XLF, if you look at it over time, it looks like it's stalling out. It looks a lot like the small caps. And momentum levels, let's just see what the small cap momentum level, I keep saying I keep saying everything except financials. The financial momentum levels are 85%. Look at where they're at right now. I love these pictures. Look at where we're at right now. Not very far from the top. So I would be very careful, because you could see over the last 5 years, how often do we go above this level? Once, twice, 3, 4, 5, 6, 7, 8, 9, 10. Once about twice a year, and we're getting there right now. So again, we may go a little higher, but be very careful that financials are already, the upside in financials could potentially be priced into this market. And goes without saying, if you look at the RSI, it's overbought right now. Now, I know it's a 2-day RSI, but it's making swing high and it's divergent. So I would be very careful. And if we see lower breakdown, financials could be coming back down and mimicking what smaller stocks are doing right now. Now, let's talk a little bit about the broad market, tie everything together, put a bow tie on it, and tell you what to pay attention to today. Retail sales is going to be big. That's coming out in about 34 minutes. Quarterly earnings, big. The broad market, not the equal-weighted market, but the broad market is still edging higher. S&P, 15-month high. The Dow, 7-month high. Nasdaq, 1.5-year high. Folks, I'm telling you as I'm sitting here right now, the market is not ready for those levels, and we will see a downside. It's going to correct. Manufacturing data is showing upside on current business conditions. And Yellen expressed confidence. This is after she's coming back from China, begging them not to have a discord with us, that the U.S. is on a good path to reduce inflation. I mean, what does that even mean without significant harm to the labor market? And she does not anticipate a recession, which is great. We now have a 97% chance of a 0.25 basis point rate hike. The higher this number goes, the more certainty is baked into the bond market, which makes it easier for it to come up. As I mentioned, we've got earnings today. Today is the big day. Bank of America, Morgan Stanley, Prologis, Lockheed Martin, Charles Schwab's. And here's the big problem. We're now looking at 8.1% decline. Earlier of the month, we were looking at a 5.7. So the revisions are going worse. They're not getting better, which is another reason why I believe the market is on its path to coming down, not up. U.S. retail sales data is in a couple of hours. We got industrial production data. You got manufacturing data. In Europe, they're shifting away from monetary policy to earnings, just like we are in the U.S. They're just shadowing us right now. China. Now, I made a point yesterday to talk about gambling stocks. Gambling stocks like Wynn, Las Vegas Sands, they don't do well when China doesn't do well because a lot of their customers are from China. When China was on the up and up, they were doing well. But there's a slowdown in China, and this can impact their consumer discretionary spending, which they spend a lot of money on gambling. China closed lower as worries about the slowdown in the country persisted. Disappointing economic data prompted economists at several prominent banks to revisit their outlook downwards. Morgan Stanley, JP Morgan, Chase, Citigroup slashed their projections for the economic growth this year to 5% after China reported weak second quarter GDP. That's bad. So gambling stocks, U.S. gambling stocks, I call a short-term top to them. The Nikkei closed moderately higher, driven by gains in bank and chip-related stocks. They had initially surged 1%, but relinquished most of those gains when the Hong Kong opened lower, dragging prices of regional stocks. And today we got a downgrade on Trade Desk. We got an upgrade on PINS. And again, Bank of America, Morgan Stanley, Lockheed Martin, Charles Schwab's, tons and tons of financial stocks are coming out. Now, keep your eye on the financial sector and keep your eye on whether we break below the 34.17 level. And also, here, 34.17. If we break through 34.17, the odds are we're going to go back down to 33.19. And if we enter this area, forget about it. We're coming down all the way to 31. So this breakdown could be very significant right now. It can take financials down, but I need to see a breakdown below yesterday's low, 34.15, 34.12. If we break higher, we could go all the way to 36.12. But I personally think that the best is behind us, and I think we're going to break down. Again, it can go either way, but I'm just not seeing anything rosy. And pre-open, we're only up 2 ticks. So be very, 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 very cautious. If you're not cautious on there, it's going to be a major, major issue. Now, before I let you guys go, folks, we're on the brink. Literally, we're on the brink of what could be the biggest financial opportunity of the decade. This rare event hasn't played out just once or twice before, but it actually happened at the end of every recession dating back to 1953. Every recession, and we've had several. I call it the Great Divergence. And within the S&P, S&P's up 20%, making 15-month highs off of the bear market lows. The timing of this epic opportunity couldn't be better. So I'm giving out my number one Great Divergence stock for free. It's a stock that 17 hedge funds are loading up on right now. All you've got to do is click on the link and claim your ticker. But better act fast because this offer, it ends July 20th. And today's already the 18th, so it ends in 2 days. The Great Divergence. Folks, you don't want to miss out. Follow the link below. Also, as I mentioned, VIP room, free, no cost, noon today, Eastern time, link above or below this video. And make sure to check out the link below. You don't want to miss the number one Great Divergence play. 17 hedge funds loaded up on it. I wouldn't miss out. I'll see you guys in the VIP room at noon Eastern time today. Bye.